Can we hear me? Good morning.
Good morning, sir.
Yeah, good morning. Yes, thank you. So we are welcome to another week for the taxation class. So I welcome everyone. So we are going to continue with from where we stopped in our last class. So for the benefit of those that are just joining us newly, so in our last class, which was the first class we started with the course content, and so I told us about what the syllabus requires us to what and what you are expected to know as far as the syllabus is concerned. Then after that, we now talk about what the one of the first aspect of the syllabus, which is what the basis of assessment. So we are able to look at what certain scenario under the basis of assessment. Then under the basis of assessment, we talk about some terms that are needed under basis of assessment. Then we also talk about basis period, which is under which we have the normal and the abnormal basis period. Then we mention certain scenario under the abnormal basis period, which I told us we can have commencement of trade or business. You can have cessation of trade or business and change of accounting date. So those are the three scenarios you can have under what? Under abnormal basis period. So we started with the commencement of trade or business. So we started with commencement of trade or business. So that is the first one we were able to deal with, which is the commencement of trade or business. And under the commencement of trade, I made mention to also we are able to look at the requirement of the law, which I told us that basically now commencement, basis period under commencement, determination of tax liability is strictly now on preceding year basis. So for a company that is just commencing operation or for an individual in business commencing operation, their basis period, the basis of paying tax will be what? On preceding year basis. And we are able to look at an illustration that last week, which we talk about the first question, which we have what under question number 1, Nana Nigeria Limited. Which one? So under there, we talk about so under the basis period, I told us that to determine the basis period in the first year of assessment, the basis period will be from the date of commencement to the first accounting period. In which the year of assessment, the first year of assessment will be what? The year after the year of commencement. Then the second year will be what? From the next day after the last accounting period to the next accounting period, and so on and so forth. So that is how to determine what basis period under what? Under commencement of trade. So we are still going to continue with what? The commencement of trade or business. So that is what we call gap. Initially, I told us that the Finance Act, how we can hear me? Hello, can we hear me? I need somebody to respond. Can we hear me? Hello? Hello?
We can hear you, sir.
We can hear you,
Thank you.
sir.
Okay, thank you. Yes. So I made mention that the Finance Act has eliminated what is called occurrence of overlapping and gap in basis period. So that means there is no need for what? For taxpayer to exercise what is called right of election any longer. But still yet, we still have what is called gap in what? In accounting year. That may be what? Gap. There may still be existence of gap during commencement in the year of assessment. So what will make a gap to occur in the year of assessment? This gap will only occur when the accounting date is earlier than what? Than the commencement date. So you can see there may be a gap in year of assessment upon commencement due to the transitional issue where the accounting date is earlier than what? Than the commencement date. So we may have a situation of gap in situation when the accounting date is earlier than what? Than the commencement date. So what do we mean by, so for instance, what do we mean by this accounting date earlier than commencement dates? So what do they mean by this? For instance, we know that accounting date, those are the days that has been specified by the business that they want to prepare their account. So let's say the accounting date of the business is usually 31st March. It's usually 31st March. So by the time this company now wants to commence operation, by the time they want to commence, they now commence on they commence business on 1st August of a particular year. So if we look at this scenario, we have 2 months. We have March and the second, which is what? August. Looking at these two, we can see that between the 2 months, March comes before August. So that means the accounting date comes before what? The commencement date. In this kind of scenario, there's going to be what? A gap in the year of assessment. So inside of the year of assessment to now be the next year, when you are doing the commencement of trade, the year of assessment, the first year of assessment will now be what? The year following what? The second year after the year of commencement. So take note of that. This will only occur in commencement when what? When the accounting date comes before what? Before the commencement date. So in that scenario, so we are going to have what? A gap in what? In the year of assessment, not in the basis period. There's no more gap or overlapping in basis period. We are going to have the gap only in the year of assessment. So such scenario is called what? Gap in year of assessment. And it's only occur. You can only find it during what? Commencement of trade. So that means what? So when you are doing your computation of tax liability, you need to be vigilant. You need to be vigilant to know what? To know whether what, there's going to be a gap in the what? In the year of assessment or not. So that is what they mean by what? Gap in year of assessment. So how do we determine this gap in the year of assessment? So how do we determine gap in the year of assessment? So let us look at this. So we are going to use question 5. So we have the Apodi water nylon on 1/10/2021. The business record shows the following results. Period to 31/03/2023, year ended 31/03/2024, year ended 31/03/2025. Required. Compute the assessable profit for all relevant year of assessment. We are asked to compute assessable profit for all relevant year of assessment. So there are 2 information that we need to get here. First one is what? We know the date of what? Of this business. We also need to what? To get what? The accounting date. So who can tell me what is the accounting date of this company? What is the accounting date of this company, of this particular taxpayer, that Apodi Venture is an enterprise? What is the accounting date? What is the accounting date of this taxpayer?
31st March.
Yeah, 31st March annually. You can see from the question. You can see, I told you to know the accounting. Just look at any year, any one you have where you have year ended. So you can see year ended 31/03. 2024 year ended 31. So that means, what that means is that this March, this 31st of March is the what? Accounting date of what? Of this particular taxpayer. So with that, so we are going to what? Use that word to answer the question. So let us look at what? So we are going to solve it on this Excel sheet. So I told you, for any question on taxation, please, it's very important. So there are basic requirements that you need to do. The first one is what? The name of the taxpayer. So we have Dapodi Venture. So that is the name of the taxpayer, Dapodi Ventures. So which happen to be the name of the taxpayer, Dapodi Ventures. So we have the Dapodi Venture. Then we also have the requirement, computation of tax liabilities for. So I told you, if you don't know the year here, you can put relevant year of assessment. So after that, we need to do our workings. So I'm going to do my working one. So under the first item, what I need is what? I need what? Date of commencement. What is the date of commencement according to this question? So if you look at the question, the date of commencement happen to be what? Let us go back to the question. 1/10/2021. So the date of commencement is what? Is equal to 1/10/2021. Then we also need what? Date, accounting date. Accounting date. The accounting date happen to be 31st March annually. 31st 03 annually. So if we now look at this question now, you can see that this accounting date, which is March, is coming before the commencement date of what? October. So what that tells you is that what? There's going to be what? A gap in the year of assessment. There's going to be what? A gap in the year of assessment. So that is the implication of that. There's going to be a gap in the year of assessment. So what do we now mean? So that means they commence operation on 1/10/2021. So instead of the first year of assessment to be the next year, which is after 2021, next year will be which year? After year 2021,
2022.
2022. So instead of the first year of assessment to be 2022, it will now be 2023. Because of what? Because the accounting date is coming before what? Before the commencement date. And the basis period will now be from the date of commencement, which is what? 1/10/2021 to the first accounting date, which is what? 31 what? 03/2022. So you can now see now, with this now, this will give you a scenario of what? So you can now see that this year of 2022 will be what? Preceding to what? To this year of assessment. If you go and put 2022 here, that tells you that what? That makes it to be what? Incorrect. So because of what you have here, in the end of the year, the year you have here must be what? Preceding to what? To the year of assessment. So with this now tells you that what? You have what? What is called what? What is called gap in the year of assessment. And if you look at this question, so how many months is this? So working 3 now. So I need 1/10/21 to 31/03/22. How many months is this? You can tell me. How many months is this? So I told you to get it, just separate it according to the number of years. In 2021, we have what? From October to December. Then in 2022, we have from January to March. How many months do we have in total year?
6 months.
6 months.
So this information is for what? 6 months. And if you go back to the question, so the question gave us, the first information we are giving in the question, they gave us period to 31/03/2023. So look at it. Period to 31/03/2023. We are giving period to 31. We are giving 31/03/2020. We are giving 31/03/2023 to be what? 1 million. 2023 to be equals to 1 million. 1 million naira. If you look at this information, that means this information is going to start from the date of commencement, 1/10/2021 to 31/03/2023. How many months is this?
That's 18 months.
So 18 months. Do we all agree it's 18 months? Do we all agree it's 18 months? So looking at it, let us analyze it. If you look at it, in 2021, we have 3 months. In 2022, January to December, we have 12 months. 12 plus 3, that is how many months?
15.
15. So then in 2023, we have January to March, 3 months. 15 plus 3, that is what? 18 months. So it's 18 months. And we only needed 6 months. So we have a 6/18 multiplied by 1 million. So how much should that give us? Somebody should press calculator for us. So that will give us a value of 6/18 multiplied by 1 million. How much did it give us? Oh yeah, press your calculator now. 6 divided by 18 times 1 million. So that will give us 333,333. So the accessible profit in the first year will be what? 333,333. So that is what? The first accessible profit. After this first year, which is 2023, the next year will be 2024. In 2024, the basis period will be a day after the last accounting date. A day after 31/3/2022, that is 1/4/2022 to the next accounting day, which is 31/03/2023. How many months is this? How many months is this information?
12 months.
12 months. So working for, we have 12 months. This 12 months, we can find it here. If you look at this information, we can find it in this 18 months. We can find it from this 18 months of 1 million naira. So basically, so we just say 12 divided by 18. Basically, we are going to say 12 divided by 18 multiplied by 1 million. So that will give us how much? 12/18 multiplied by 1 million. So that will give us 666,667. So that will give us 666,667. So which is what? The year of assessment for the second year of. Then under the third year will be 2025. So 2025 will be basis period will be a day after this, which is 1/4/2023 to the next accounting day, 31/03/2024. So if we go to the question, so how many months? 12 months. If we go to the question, 31/03/2024. If you look at this question, the question has specifically given us that figure to be what? 380,000. So since they have given us the figure to be 380,000, so you are not going to do any computation. So you just pick the figure straight away as well. 380,000 naira, which is what? Then in 2026, so the basis period will be what? 2024 to 31/03/2025. So this information too, we're also giving by the question. So from the question, so we also provided this information from the question as what? As 450,000. So since we are provided with the information, so you don't also need to do any computation. So you just slot in there as what? 450,000. So which is what? Then 2027. We cannot proceed to 2027. Why? Because if you look at the question, so the information given to us ended, information provided to us by the examiner ended as what? Year ended 31/03/2026. So that means what? We cannot go to what? The next year, which is what? 2027 year of assessment. So with that, so we have successfully computed what? The tax liability under what? Using what? Using the what? The information provided. So we cannot go to 2027. The information given does not what? Extend to 2027. But what the examiner want to test here is to know whether what? You are going to what? Give gap in the what? In the year of assessment. So this gap, this occurrence of gap, so you can see the scenario, so which is what we have here. So you can see the occurrence of gap will occur when there is what? So let me go back to the material. So that gap will occur when there is what? So this is the solution as well. So that gap, instead of having 2022 as the first year, you are going to skip that first year. Then you now go to what? The next year. They call it a gap in what? In the year of assessment. And that gap will only occur when what? When the accounting date is earlier than what? Than the commencement date. So take note of that. Please let us take note of that scenario. So in other words, in order for us to know that, so we can still have a scenario of a gap. Gap in what? In the year of assessment, and not gap in the basis period. The gap will only occur in the year of assessment. So let us take note of that. Any question? Any question? So in the absence of no question, so we'll move further to the next one, which is what? The next basis under abnormal basis period, which is what? Cessation of business or trade. Cessation of business or trade. So when they say cessation of business or trade, cessation of business is a situation whereby a company permanently ceases operation. When a company look at that word, permanently ceased operation. So when there is temporary stoppage of operation, maybe you want to stop due to maybe certain unforeseen circumstances, inferno or something. So when there is temporary stoppage of operation, please, that is not what? Cessation of business. So that is T1. So the principle of going concern will still apply to that when there is a temporary temporary stoppage. But when there is a permanent stoppage, that means that business is not going to come up. You are not going to engage in that business again. They call it what? Cessation of trade or business, temporary stoppage of what? Of business. And this cessation of business can be either be voluntary or involuntary, depending on what? On the circumstances surrounding what? The stoppage of the business. So we should note that, so when there is what? When there is just permanent stoppage, so when there is what? A stoppage for what? For a short period of time, that is not what? Due to either strike, labor unrest, or some other what? Unforeseen circumstances, that is not what? Cessation of business. Cessation of business is what? Is a situation whereby what? There is going to be what? Permanent or stoppage of what? Of the business activity. So what are those regulations that may lead to, what are those reasons that may cause a cessation of business? So factor that may lead to cessation of business. So one of them is your government legislation. Government legislation. So recently there was a law made by what? The Lagos State government, that they don't want to what? They don't want the usage of this particular takeaway foil paper. That particular takeaway. There was a ban on that takeaway by the Lagos state government. So as a result of that, that can lead to a cessation of business. If that business is a business that is only what involved in what selling is that product, if that product is only utilized by what by the Lagos citizen, and Lagos state government has stated that what they don't want citizens to what to make use of what they don't want to see that particular product in their vicinity again. So what will happen to the business? That means that there's going to be what stoppage of what of business. So government legislation can what can lead to what cessation of business. Then we also have what inability to source for what of sourcing raw material, inability to get what the raw material you need to produce, because for you to produce you need what the raw material to carry out your production. When you are unable to what to get what those raw material and there is a disability to get it, it's going to get lead to a cessation of business. So loss of major market due to a stiff competitor or economic prices. So your market, there is a loss of the market where you normally sell that product. So that means there is nobody to buy the product. So it's going to what lead to a cessation of business. So inability to settle debt, liquidity problem. The company is owing a lot of debt, a lot of their supplier, they are owing them. So the supplier can also what carry out or liquidate. Hello? Do you have a question?
No, sir. No, sir. I was not hearing you before. I thought it was the network. No, sir.
Okay. So when there is an inability to settle the liquidity problem, so you have what a lot of debt to settle your supplier, to settle those people that supply. So as a result of that, those supplier can carry out a liquidation process against the company. So we also have a loss of key personnel with technical know-how. You have a personnel, an expert who is the alpha and omega of your production. Where that person is being lost, it may also what disrupt your what business activity. There may also be what cessation based on what agreement by what by the management. The management, the owner of the company, they may decide that they don't want to work together again. They don't want to do that business again. So they may decide that they want to what, liquidate. So that is what agreement between them. Then we also have a mismanagement of fund. So where the management, those director, those people who are entrusted with what with the company activity, where they embezzle what the fund. So if they embezzle the fund, there won't be any fund to carry out the activity. So that may lead to a cessation of business. Then it may also be what complying with what the order of court through an application of credit. I made mention of it earlier that where there is liquidity problem, those people you are owing, they may they may carry out a liquidation process on the company. So where you are owing them, so there may be a court order. That's what the liquidation should be cessation should be carried out on the company. The failing objective. So where there is a decline in profit. Another reason why a company may also liquidate is when there is a natural disaster, earthquake, fire, where there is flood. When flood came or when fire occurred, the fire destroyed a lot of all your company premises, and that company is not under an insurance policy. What is going to happen to that company? There's going to be cessation of business, because there won't be anywhere to carry out the business activity, because it will not be easy for them to source for the fund to carry out the business. The death of all shareholders, where all the shareholders of the company, where they die, it may also lead to a cessation of business. So you may be asked by the examiner for those factors that can make company to cease operation. It is examinable. Most time when examiner asks question on cessation, they usually ask for factors that may lead to cessation of business. Basically, how do we now determine how do we determine the basis period when a business is ceasing operation? When we started this topic, we made mention of commencement of trade. And I told us that it is expected that when you commence your operation, they expect you that your business should be in operation until Until perpetuity. They don't expect you to stop that operation. So, and when you start your operation, it is expected that what? You are going to be preparing your account on what? On preceding year basis. When you now prepare your account on preceding year basis, so when you now decide to cease, it is possible that one you are here to what? To get to that preceding year basis. So what will now happen? So how do you now determine what? The basis period for cessation. So the basis period for cessation will simply be from a day after the last accounting period. It will be from a day after the last accounting period. Basis period for cessation will be from a day after the last accounting period up to the date of cessation. Note that information. From a day after the last accounting period. From a day after the last accounting period up to the date of cessation. So you have been preparing your account on preceding year basis. That your account you prepare on preceding year basis, the last day that you prepare the account, the next day after that day, from that next day up to the date of cessation. So that will give you what? The basis period when a company is ceasing operation. And this basis period now, there are tax implications that are applicable to what? To this basis period. Tax implication in the sense that this particular business that want to cease operation can either be, I told us earlier that we have two categories of taxpayer. Who can remind us what are the two categories of taxpayer available? Two types of taxpayer. Two types of taxpayer. We have two types of taxpayer or category of taxpayer. What are those two categories of taxpayer? Oh yeah, now two categories of taxpayer. What are the two categories of taxpayer? Do you want me to be calling your names?
A company or an individual?
Yes, thank you. Company or an individual. Thank you, Joy. So either company or an individual. So those are the two categorization of taxpayer. Either you are a company or you are an individual. So those are the two categorization of taxpayer as well. So these two categorization, they have a tax implication. Please take note where the taxpayer is a company. Where the taxpayer is a company. So such company, they have what? Within 6 months from the date of cessation to settle their tax liability that arises from cessation. Take note of that. Where the taxpayer is a company, where a company permanently cease operation, that is that taxpayer that want to cease operation is a company. So the law give him what? A grace of 6 months after the date of cessation to settle that tax liability. So that 6 months now, after that 6 months, if that taxpayer is unable to settle that tax liability, there's going to be what? Penalty and interest is going to be what? It's going to also accrue on that what? On that particular tax liability. So when you are ceasing operation, the fact that you are stopping your operation does not mean that you are going to run away with the tax liability. You also have what? A tax obligation to what? To the government to make. So those tax liability you now owe up to the date of cessation, you have within 6 months as a company to settle that tax liability. Then where the taxpayer is an individual, for individual taxpayer that is into
Sorry,
business
sir.
activity. Yeah, okay.
What even is in a situation whereby the company is actually running it on a loss? Maybe that was the reason why they had to close down the company. Will they still be liable to tax? Because tax is meant to be charged on profits. If I'm
Yeah,
correct.
where there is no, yeah, tax payment of tax is on profit. Where there is no profit, no tax will be paid. Where you are making a loss. The fact that one thing you need to get is that
Okay, but that means the book of accounts.
yeah,
Okay.
the fact that when you prepare
Okay.
your book, as the company, by the time you prepare your book give you what? a loss, that does not mean that for tax purpose, that account is also what? Is also making a loss. Why? Because for tax purposes, there are some expenses that you are going to allow in your book that is not allowable for tax purpose. Do you get that? So that means the fact that under your accounting, by the time you prepare your account, your accounting information is giving you a loss. When tax authority come, they are going to re-prepare that your account and call it what is called adjustment of profit. Because not all the expenses you include are what? Not all of them are allowable. Some of them are disallowable. So they will only look at those that are allowable. By the time they look at those that are allowed, it is possible that your account that you said is giving you a loss. By the time they consider only the allowable expenses, it will end up what? Providing what? Generating a profit. So, but basically, where you are not making, whether after doing the adjustment, where the adjustment give you a loss, no tax liability is payable. So, as a company, you have within 6 months to settle the tax liability after the date of cessation. Where the taxpayer is an individual, the taxpayer has within 3 months. Note that information. As an individual taxpayer, you have within 3 months. As a company, you have what? Within 6 months to settle the tax liability. This information that I gave you now, the year of assessment after cessation. This 6 month period and 3 month period for individual, 6 months for company, 3 months for individual, will help you in determining what? The year of assessment during cessation of business. Take note of this information I just mentioned now. This period of 6 months for company and period of 3 months for individual will help you to determine what the year of assessment during what? Cessation of business. Will help you determine the year of assessment during cessation of business. So if you now cease your operation, so it is either you have a 6 month or 3 months, depending on your what? On your nature, either as what? As an individual or as a company. So how do we now determine this year of assessment? So let us look at this first illustration. So we have illustration 1. PHB Nigeria make up its account to 31st December and permanently cease operation on 30th April 2020. The relevant year of assessment and the due date for payment of tax as follows. Relevant year of assessment and the due date of tax are as follows. Relevant year of assessment and the due date of tax are as follows. This PHB, I'm coming, I want to check something. Okay. This PHB, there is supposed to be Nigeria Limited in front of it. Please let us take note of it. There is PHB Nigeria Limited. What that means is that this particular taxpayer is a company. This taxpayer is a company. And for company, I told you that company, they have within how many months to settle their tax liability after cessation? How many months do they have?
6 months.
6 months for company.
6 months.
So this question is now asking us to determine the relevant year of assessment and the due date for payment of tax due. So relevant year of assessment, we have the year of assessment, we have the basis period, due date for what? For tax payment. So what are so how do you determine? So the date, so the first thing you need to do is what? Get your date of cessation. Date of cessation is what? 30th April 2020. 30th April 2020. 30th April 2020. This company will have prepared and the accounting date of this company, they told us that this company make up its account to when? 31st December. 31st December. They make up account to 31st December. What that means is that before this 30th April 2020, this company will have made an account that is ending what? 31/12/2019. They will have prepared an account that will end as at what? That will start from 1/1/2019 to 31/12/2019 based on their accounting date of 31st December. And for this period that is ending 31st 12, 2019, the year of assessment will be what? Year following what? This year, which is what? Which will be 2020 year of assessment. So for this company, they are going to have an account for 2020, which is 2020, in which the basis period will be 1/1/2019 to 31/12/2019. Then they now cease operation in that year 2020 again, as at what? April. If I add 6 months to April, what month are we going to have? Add 6 months to April 2020.
October.
So we have
That's
what?
October.
October, which year? October of which year?
2020.
October, still year 2020. What that means is that what? After this first 2020, the next year will also be what? 2020 year of assessment. And the basis period will now be a day after the last accounting period, which is what? 1/1/2020 to the date of cessation. And what is the date of cessation? 30/04/2020. 30/04/2020. So the due date now will now be this one that is ending 31/12/2019. The due date will now be 6 months after the date of cessation, which is what? 30th June. 6 months after 31/12/2019. Will give us when? 30 June 2020. Then why 6 months after 30/04/2020 will give us what? 31st October 2020. So you can now see that that date of that 6 months help us to determine the what? The company what? Year of assessment during cessation. That is what they mean by what? Determination of year of assessment during cessation. So let us look at another scenario. We have illustration 2. TUG Limited make up account to 31st December and permanently cease operation on 31st July 2020. The relevant year of assessment and due date are as follows. Look at this one now. Their accounting date is still 31st December 20 December annually. And they cease operation 31st July 2020. That means before this year, they will have prepared an account as at 1/1/2019 to 31/12/2019, which is what? The preceding year account. So that account, the preceding year, the year of assessment will be 2020. After this 2020, they now cease operation 31st July 2020. If you add 6 months to July, to 31st July, which date do we have? If we add 6 months
January
to
2021.
January 2021. So that means what that means is that what? The year of assessment has extended beyond what? 2020. So the year of assessment can never be 2020 again. It will now be what? 2021. Because of what? The 6 months period. So the year of assessment will now be what? Instead of 2020, it will be what? 2021, in which what the basis period will be a day after the, which is 1/1/2020 to the date of cessation, 31 July 07 2020. And due date for payment, this one will be 6 months after this, which is 30 June, and this one will be what? 31st January 2021. That is what they mean by what? The due date for payment. Then we also have the third one, Bakoje Venture, make up account to 30 September annually and permanently cease operation on 30 June. So then I want to ask us one question. This Bakoje Venture now, if there's a venture, what category of taxpayer is venture?
An individual.
Yeah, thank you. So please, where you did not see the word limited or PSC in front of what? A taxpayer. That tells you that taxpayer happen to be what? An individual. It can either be venture, it can be enterprise, it can be any sole proprietor and so on and so forth. So this is what? An individual. An individual taxpayer in business. They have how many months after the date of cessation to pay their tax liability? How many months does individual have?
3
3
months.
months.
3 months. Their own is what? 3 months. They have 3 months, a grace of 3 months. So how do we now determine that? So Bakoje make up his account to 30th September. So what you need is what? The date of cessation. They cease on 30 June 2020. So that means before this date, they will have prepared an account as at 2019. 30/9/2019, which is going to start from 1/10/2018. for the period of 2020. They now cease operation 30 June 2020. If you cease operation 30 June 2020, because this particular taxpayer is an individual, if you add 3 months to this 30 June 2020, when is it going to give us? Add 3 months to 30 June 2020. Oh yeah, now.
September.
September which year?
2020.
2020. So that means the year of assessment will still be what? 2020. So the basis period will now be a day after this, which is 1/10/2019, to the date of cessation, 30 June 2020. Due date of payment will now be, for this one, 30/09/2019. This one will be what? Because this one is not the date of cessation. This will be what? 6 months after. Look at the difference. This particular date is not the date of their cessation. All business, they have 6 months after to pay their tax liability. It is only when you are ceasing operation that you now have, after the date of cessation, as a company, you have 6 months, but after the date of cessation, as an individual, you have 3 months. But when you are not ceasing operation, whether you are an individual or you are a company, you have 6 months to what? Grace period to what? To settle your tax liability and file your return in order to avoid what? Penalty and interest. So, because this date is not the date of cessation, they are going to have 6 months to settle their tax liability. 6 months, if you add 6 months to this 30th September 2019, what date is it going to give us? Someone should help me add 6 months to that 30th September 2019.
March.
31st
March what?
March.
31st March. Which year?
2021.
2021. 2020. You can see. That is why you have the due date here. Then why for this one? Because this last date you have is the date of cessation. And this taxpayer is an individual. Is going to have only how many months? 3 months. 3 months grace period. So 3 months from 30 June will now be what? 30th September 2020. So that's how to determine what? The tax liability for what? For cessation of business. And the year of assessment under cessation of business. So do we get that? So it is also possible that after cessation of business, you have ceased your operation now. Those people that you are owing, or those people that are owing you, they now decide that is when what? They found that, okay, maybe you sold a particular item on credit. You sold an item on credit. When you now sell those items, you now said, okay, the agreement between you and the buyer is that the buyer is going to pay by what? By the end of April. Maybe before that April, as at February, you have ceased operation. The fact that you want to cease operation in February, that does not mean you are going to what? You are going to force the buyer to come and pay you as at that of February. The buyer will still wait until what? Until April before he's going to make his payment, because that is what? The agreement between you and him. So it is possible for you to receive any money afterwards, after the date of cessation, or for you to what? To make any payment after the date of cessation. So where those items occur, it is expected that what? That transaction should be adjusted against what? Against the profit as at the date of cessation. Take note, where there is what? Where there is an income that is received after the date of cessation and payment is made after the date of cessation, those transactions should be adjusted against the profit as at the date of cessation. After you now adjust it as at the date of cessation, what you now arrive at is what is called what? Terminal profit. Where the item is an expenses is going to be added. So please, where the item is an expenses is going to be deducted from your what? From the profit as at the date of cessation. Where is an income is going to be added to what? To the profit as at the date of cessation. So when you now do those adjustments, what you arrive at after making those adjustments is what is called what? Terminal profit. So terminal profit. So if there is going to be, if you are making any payment, you what? You deduct the payment. If you are receiving any amount, you what? You add what? Amount received. So what we now have is what? We have a profit for adjusting terminal result. So how do you adjust the terminal amount? You look at what is the amount as at the date of cessation. Then you deduct what? Additional expenses incurred after the date of cessation. So what are those additional expenses? For instance, maybe you are paying what? Liquidation expenses. You engage the service of a lawyer to carry out what the liquidation process. You need to pay in. So any amount you pay to what? To that service, to that lawyer is also what? Payment after what? After the date of cessation. So then you deduct the payment and what? You add what? Any income you receive after what? After the date of cessation will be added. After adding in, what you now arrive at is called what? Terminal profit. So this item here is regarded as what? Terminal profit. Please, let us take note that what we are going to adjust will be what? Will be information provided, transactions that occur after the date of cessation. It is possible for... Hello? Who is that now? Mute your mic, please. What we are going to adjust are transactions that occur after the date of cessation. It is possible for the examiner to give you transactions occurring before the date of cessation. When you are giving that, please, you have no business with that. That will have been what? Taken care of earlier. The only transaction you are going to adjust will be those that occur after the date of cessation. So what that means is that in the exam, where the examiner gives you transaction before the date of cessation, so please, you are going to ignore those transactions when you are determining your terminal profit. It's only transaction that occur after the date of cessation that you are going to adjust against against the profit as at the date of cessation. So let us take note of that. So any question? Any question? So in the absence of no question, so let us look at an illustration to illustrate. So we have a question. We are going to look
please,
at
I want to
question
confirm
number.
something.
Okay.
Yeah, so I want to confirm that those ones that you just explained now, so
Yeah.
the 2 or 3 lines are the question, why the table after them are the answer, right?
For which one?
For that after cessation
Okay,
question.
yes. For this one, Abby. This one, for this one, for this
Yes.
illustration,
Yes.
1, 2, and 3, Abby. Yeah, these are the question.
Yes.
These are the solution. This is
And the
question.
table.
This is the
Okay.
table is the what? Is the requirement. What is required of you? Yes.
Okay. Thank you, sir.
Yeah. So we have question number 5. We have Golden Tech Limited, a company located in Lagos, Nigeria, commenced operation on 1 November 2020. Due to swift government regulation, the board of directors decided to cease operation on 31 December 2024. The adjusted profit for the year to cessation date as follows. We have period of 30/9/2021, year ended 30/9/2022, year ended 30/9/2023, year ended 30/12/2024. The following additional information relates to the company. Bad debt in the sum of 120, which was written up in 2022 year of assessment, was recovered in October 2025. A sum of 20,000 was spent to recover the debt. An expenditure of 350 incurred in the year of assessment, though was considered in statement of comparison, was not paid until August 2025. On cessation of the revenue, authority intends to conduct a back duty investigation, and the taxpayer has been duly informed. Required. Compute the assessable profit for relevant year assessment year. Compute the assessable profit for relevant assessment year. So compute the assessable profit for relevant assessment year. If we look at this question center both on what? On cessation, and it's also having commencement. This question is having cessation and it's also having question relating to commencement of trade. So it is what? 2 in 1. But in order for you to tackle this question, you need to analyze it one after the other. So let me go back to our Excel. So I'm going to, after the class, I'm going to send the Excel to the group so that we have it for our own usage. So this question now, ask us. The question is asking us for what? For, if we go, computation accessible profit for all relevant year of assessment. As I told you, the first thing you need to do is you need your what? Very important. Very, very important. The requirement of the question is very important. Golden Tech. So the name of the company, Golden Tech. Golden Tech. Golden Tech Limited. Golden Tech Limited. Then requirement computation of accessible profit for relevant year of assessment. So we also have our workings. Under the working, we have note working. The first one, we have a date of commencement. So what is the date of commencement? What is the date of commencement? If you look at, let us go back to the question. Date of commencement from the question.
November 1st.
So according to
20.
the question, so we are told that company commence operation on
November
November 1,
1st.
2020. 1/11/2020. Then we also have the second one, which is what? Date of cessation. What is the date of cessation?
31st December
December.
2024.
2024. So look at it, 31st December 2024. 31/12/2024. Then we also need what? Accounting date. Who can tell me what is the accounting date of this company?
30th
Accounting date.
September.
30 September.
30th September 09 annually. So these three information will give us a guide to what? To computing the accessible profit. So for the first commencement, so for the first year, so we are going to apply what? So we have what? The year of assessment. You have the year of assessment.
Sir, we cannot see your
It's your
Excel.
working sheet.
Okay, sorry. I thought I have shared it. Let me share it back. Okay. We have the year of assessment. We have the basis. Please, in the exam, write it in full. Oh. We have the accessible profit. Year of assessment. The first year date for a company that commenced operation 1/10/2020, and the accounting date happened to be 39 annually. What will be the first year of assessment? You can tell me. They commenced 31/11/2020. What will be the first year of assessment? Oh yeah, I'm listening to us.
2022.
2021.
2021, Abi?
Yes.
Are you sure?
I think 2022.
Why? Why is it 2022?
It's 2022.
Okay,
Why?
because so from this date of commencement, if we say 1st of November 2021, it will be to 30th September 2021, and that will be assessed in 2022.
There is a reason.
Using
There is a
preceding
name.
year basis.
There is a name which this particular scenario, we did this when we started this.
Preceding year basis.
No. What is the reason why we have to? This scenario is called what? Gap. There's going to be a gap. What will make a gap to occur in year of assessment? We did it when we started today. What will make a gap to occur in the year of assessment? Oh yeah, now gap. I made mention of it. That is when what? When your accounting date is earlier, comes before your what? Commencement date. You can see accounting date is September. Commencement date is what? November. So there's going to be what? A gap. Instead of the first year of assessment to be 2021, it will be what? 2022. So that is the reason why what? You have what? A gap. So the basis period will now be from the date of commencement, which is 1/11/2020, to will be from 1/11/2020 to the first accounting period, which is what? 30 what? 09, 20 what? 30/09, 20 what? 1/11,
2021.
2021 will be what? The basis will be the basis period. And before we can get all this basis period, we also need to determine what is called what? Terminal. Part of our working, we need what is called terminal profit. Because according to this question, so we are told profit as at date of cessation. So let us go back to the question. How much is the profit as at the date of cessation? So let me go back to the question. So profit as at the date of cessation, as at the end of the date of 31 December 2024, the adjusted profit we are giving happen to be what? 6.3 million. Abi? Hello?
Yes.
Profit as at the date of happen to be 6.3
Yes, sir.
million.
Yes.
So adjusted profit as at date of cessation happen to be 6.3 million. 6,300,000. So this profit now, we are now going to adjust this profit against what? Against, so we now add any item that was any money that was received after what? After the date of cessation. Don't forget, date of cessation is what? 31/12/2024. So if the date of cessation is 31/12/2024, so the question now told us, look at it. A bad debt in the sum of 120, which was written off in 2022 year, was recovered in October 2025. This October 2025, is it before the date of cessation or after the date of cessation?
After the date of
After the date.
cessation.
It's after the date of cessation. And this amount, it was initially a bad debt. If they now recover it, it will now become what to the company? A what? Income or expenses? It will become what? An income.
Okay.
It will become an income to the company. So we are going to add it to our profit as at the last day of cessation. So we have a bad debt, add bad debt recovered, which is what? 120,000. 120,000. We also less. They told us from the question, we are told that to recover that bad debt, they are going to spend how much to recover the debt? 20,000.
20,000.
20,000 was spent to recover the debt. That is what? That is an expenses. Debt. They will have a debt. Expenses. 20,000. Then we are also told in the question that we also have what? The third note. An expenses of 350 incurred in the assessment year, though was considered was not paid until what? August 2025. This August 2025, is it before the date of cessation or after?
It's still after.
After.
After the date of cessation. This happened to be what? An expenses. And any expenses I told you are going to deduct, while income will be what? Added. So you also deduct less what? Less additional expenses. How much is that? The additional expenses, 350,000. 350,000. So when you add 350 plus 20,000, so that will give us what? 370,000. So you less it. By the time you add up this information, by the time you add up these three items, it's going to give you 6,050,000. This 6,050,000 is what is called what? Terminal profit. So this terminal is called terminal profit. So now back to our solution. So our solution, I need 1/11/2020 to 39/2021. So let me go back to my question. 1/11/2020 to 31/2020. If you look at the question, 39/2021, we are giving that information straight away, Abi? We are giving that information, which is what period to 39/2021. To be how much? How much is that information given to us?
2.1 million.
2.1 million. This is it. They gave us that information straight away to be what? 2.1 million. So this, since the example of it straight away, accessible profit here will be 2.1 million. So which will be what? The accessible profit for that. After 2022, the next year of assessment will be which year? What will be the next year of assessment?
2023.
2023. Basis period will now be a day after this. A day after 30/09/2021 will be what?
1/10/2021.
1/10/2021 to the next accounting date, which is what? What is the next accounting
30th
date?
September 2022.
30/09/2022. So if you look at this information, we also give you this information directly by the examiner to be what? 2.4 million. The examiner give us that from the question. They also give us, go to the question, you see that we are giving that information to be what? 2.4 million straight away. After 2023, we have 2024. 2024 will be, so 2024 now, something now happen. 2024 now happen to be what? Which year did this company cease operation?
2024.
2024. They cease operation as at 31, look at it, 31/12/2024. So this year, 2024 now happen to be what? The year of cessation. So you need to be vigilant because 2024 is the year of cessation. So because 2024 is the year of cessation, so in that 2024, you are still going to have the preceding year account, which is from 1/10, 20, 22 to 39/2023. Abi? So for the preceding
Yes,
year
sir.
basis. So this information, the examiner also give us this item. The examiner has given us this item to be what? 3,640,000.
2,640,000.
It was given directly to us in the question as 3,640,000. So after 2024 now, 2020, we are supposed to go to the next year, which is supposed to be which year? 2025, Abi?
2025. Yes, sir.
Yeah.
But before you can say you want to go to 2025, we must first of all determine what? The due date of payment. This particular taxpayer, is he a company or an individual taxpayer?
A
An
company.
individual. Okay.
Somebody
It's a
say
company.
individual.
No, it's
It's not
company.
it's a company, no. It's a company. And I told you that under cessation, company, they have how many months grace period to pay settle their tax liability?
6 months.
6 months. What now happen is that you are going to add 6 months to this date. Add 6 months to 31/12/2024. Which, what do we have?
31st June 2025.
2025. So that means the next year of assessment will give you 2025 year of assessment. So the basis period company is what? Is September. So the basis period for this one will now be from 1/10, 20, 23 to 39, 2024. How many months is this? How many months is this information?
It is 12 months.
12 months.
12 months. And if you look at this question, note 5.
Hello, sir.
We can't hear you, sir.
Are you there, sir?
Yeah, I think the network logged me out. So after looking at, so let us continue. We are giving period to 31, which is what? Which we have adjusted to be what? That person should mute his mic. Oh, who is that? Ayodeji. Olushi. Okay. Okay, thank you. So we are giving period to 31/12/2024 to be 6,050,000. So that item to be 6,050,000. I hope we can see my Excel sheet, Abi.
Yes.
Can we? Yeah. Okay.
Yes.
So we have adjusted it to be 6,050,000. If you look at this information will be according to the question. The last year ended happened to be 30/9/2023. That means the next information will have started from 110. This information will have started from 110/2023 to 31/12/2024, which is how many months is this? From 110/2023 to 31/12/2024. How many months?
3 months.
15. So we have 15 months. And we only need, according to this information I have here, I only need this 12 months first. So the illustration will now be 12 divided by 15 multiplied by 6,050,000. So that will give us how much? That will give us how much? 12 divided by 15 multiplied by 6,050,000. 48. So that will give us 4840,123. So that will give us what the value here, 4840,123. After this, as at 30/9/2024, the company has not ceased up. This is not the day they cease operation. So you now go to the next. So the next year will still be 2025. The basis period will now be from the last accounting date, which is 110/20/24 to the date of cessation. What is the date of cessation? The date of cessation will now be what? What is the date of cessation?
December
1 December 2024.
31/12/2024. Then how many months is this one?
3 months.
3 months.
3 months. So that will not. So this information we can find it in this was 6,050,000. So that will be 3/15 multiplied by 6,050,000. So that will give us how much?
1.210,000.
Yeah, thank you. So that will give us 1210123. So that will give us the value 1210123. So this is the last day of cessation. So you cannot proceed. So you cannot go to any year afterwards after this last day of cessation because of this question relate to cessation of trade or business. So with that, so you can now see from so we also have the solution in the material. So you can now see from the solution that you have the information relating to what. So this is the solution according to what, so that we just saw. So then the working are also what in that on that what Excel sheet. But what you just need to do for what cessation of trade is that you need to first of all adjust what the profit as at the date of cessation. If there is any item, any money that is being received or any money that is being paid after the last day of cessation, please let us take note of that. So you are going to what adjust it against what against those items. So under the what for the last day of cessation. So that is for what for cessation of trade or business. Any question? Then we have a question number 4. That question is also on cessation. That question number 4, that question is our assignment. Please let us take note of it. Question number 4 is our assignment. So that assignment, so to be attempted by us. So I want us to attempt it. Then after attempting it, just send it to my WhatsApp number. So please don't send it to the group so that other people will not copy you. So after attempting it, send it to my WhatsApp number. So I'll help you look at it and do the necessary work correction on it as needed. So please, if you are giving any money, any item relating to item before the date of cessation, please, it will not affect the date of cessation. Somebody is asking which number so question number 4 is the assignment. Question number 4 on page 9. Question number 4, page 9. That is what our assignment. Question number 4, page 9. So that is our assignment. So question number 4, page 9. So after that, so we proceed further. So we now have, after change of accounting date, so after cessation of trade, the next one we have under abnormal basis is change of accounting date. Change of accounting date. So we already know that accounting date, those are the dates that is the date that a company has specified or choose that they want to be preparing their account. They call it what accounting date. So if you have chosen a particular date, it is expected that that date you should continue with that date to what? To perpetuity. The law does not expect you to be changing from one accounting date to the other. So, but when you want to change the accounting date, the law does not stop you from changing your accounting date. So you have what? You have a right to change your accounting date. So what do you now mean by this change of accounting date? So that means what? A company that has been known to be preparing their account, let's say to 31st December annually, now decide to prepare their account to 31st March annually. That scenario is what is called a change of accounting date. A company that has been known to prepare their account for a particular accounting date now decide to change that accounting date to another date. So that is called a change of accounting date. So when we have this scenario of change of accounting date, so there are also tax implications that are applicable to it. So how do we work? So why may company change accounting date? So there may also be reason why company may also decide to change accounting date. So one of the reasons is to implement a new tax policy. So maybe if there is a new tax policy that came into existence and the policy now said, okay, all company must go in line with so date. So in order to be in line with that tax policy, so there is going to be change in accounting date. So for ease of consolidation of financial statement, where the company happen to be within a group of company, we have holding and subsidiary. Holding and parent and subsidiary company. So and whereby the parent company is having it's a company that is having a particular date already, which is different from from the date that the subsidiary is adopting. So in order for the account to be uniform, they also need to go in line with the date of the holding company in order to apply uniformity. when there is what? Acquisition. If you want to acquire a particular company, so maybe that company has been preparing their account on a different date, and you have a different. In order for you to acquire it, you also need to go in line with the date of that company for the purpose of merger. So when there is merger, there will also be change of accounting date. There may also be a government directive or legislation. So government may also direct that. There was a time that government directed that all banks should maintain should keep their accounts as at the end of as at the end of December. So you maintain December as their accounting date. So there may also be government directive for change of accounting date. So what are now the rules for this change of accounting date? So for when there is change of accounting date, the law is particular about 3 years of assessment. The law is particular about 3 years of assessment, which is the first one will be the year of change, and there's 2 subsequent years after the year of change. The year the company changes accounting date, and 2 subsequent years after the year of change. And when there is change of accounting date, there is usually what we call right of election. We still have right of election under change of accounting date. And who has the opportunity to exercise this right of election? It is the tax authority. Because the tax authority does not tell you to change your accounting date. So when you now decide to change your accounting date, tax authority have an opportunity to exercise right of election. By exercising that right of election, what they are going to do is that they are going to select which one out of your tax liability is giving them we give them the highest tax liability. Which one out of your accessible profit we give them the highest tax liability. Then what is now the tax consideration, tax authority consideration for change of accounting date? When you want to change your accounting date, there must be a request. It is not it's not that you just wake up in a day and say you want to change your. There must be a request. The request must be made to the relevant tax authority. You must have written to the relevant tax authority that you want to change your accounting date. Then the reason why you want to change that accounting date must not be because you want to avoid the payment of tax. There's what we call tax evasion and tax avoidance. The reason why you want to change must not be to evade tax. Must not be for you because you want to reduce the amount of tax you want to pay. Where that is the reason, such request will not be granted. So your reason must not be to evade tax. Then the ultimate tax year of the taxpayer must not be included in the 3 statutory fiscal year of the taxpayer required for computation of accessible profit. That is that year. So the year the year of change. That is. So where you change your accounting date, year before the year of change will not be part of the year that will be utilized in determining the year in which the taxpayer changes accounting date. So year before the tax year will not be part of the year in determining the year to determine the year of change of accounting date. So how do you now determine the basis period under change of accounting date? Determination of basis period under change of accounting. So, or what are the steps to adopt when you are determining the accessible profit under change of accounting date? The first thing you are going to do is you identify the year of assessment in which the company changes the accounting date. That is, you identify the year in which the company failed to prepare account to the particular date. They call it the first year of change. Identify the first year of change. After identifying that first year of change, so you now identify 2 subsequent years after the year of change. Identify 2 years of assessment following that year when the failure occur. That means for change of accounting date, the tax authority, you are particular about 3 years of assessment, which are the year of change and 2 subsequent years after the year of change. Note that you are particular about what? The year of change and 2 subsequent years after the year of change, making it what? 3 years of assessment. Then after that, identify, then compute accessible profit on preceding year basis. Using what? On preceding year basis for the 3 years based on what? Old accounting date. That's going to be what? Because you are changing your date, there will be a date that you are using before, and there will be a new date. That date you are using before is called what? Old accounting date. While the new date is the new accounting date. So you are going to prepare accessible profit for those 3 years you identify. Using what? Using preceding year basis. On what? On old accounting date. You prepare what? Accessible profit on preceding year basis. Using what? Based on what? Old accounting date for those what? For those 3 years that you identify. The same way, you also compute what? Accessible profit for those 3 years on preceding year basis. Using what? For the what? Using the new accounting date. So that means what? You are going to compute what? 3 years separately using old accounting date on preceding year basis. You also compute what? 3 years separately using what? New account for the 3 years using new accounting dates on preceding year basis. Those information will be done separately. So for the old and what? The new accounting date. After doing the one for the old and the new accounting date, you now add them up separately. You add up the 3 years for the old accounting date separately. You add up the 3 years for the new accounting date separately. Add them up separately. After adding them up, the next thing is what? You now select the basis that result in what? Higher accessible profit, which will increase what? The tax authority tax liability. So you select what? The one that will give you what? The higher accessible profit. Why? Because what? It is the tax authority that has what? The right to exercise the right of election. Tax authority has the power to exercise right of election. So when you are changing your accounting date, they are going to look at what? The date that is going to give them what? The larger what? Tax liability. So the one with the higher tax liability will be what? Will be selected by what? By the tax authority. So let us take note. So those are the steps to be followed in determining what? In implementing what? A change of accounting date. Then how do we now determine this first year of change? It is very important to know how to determine the first year of change. Please let us take note of that. Determination of the first year of change. That first year of change is that year in which the company failed to what? To prepare its account to what? To its known accounting date. Then how do you know that there's a change in that first year? For you to know that there is a change in that first year, these are the scenario you are going to look at. The first one is that what? You are going to look at a situation whereby the what? The year of there must not be any year ended in that what? In that particular year. That year in which what? There's going to be a change of accounting date. The company must have not prepared any accounts. There must not, and for you to have a year end, that means an account has been prepared. There must not be a year end. That means what? An account has never been prepared in that particular year. So where an account has not been prepared, that can be what? Regarded as what? As a year of change. There must not be what? A year end in that year. Also, the difference between the old and the new accounting date must be up to or more than 12 months. For you to know that there is a change in the accounting date, the difference between the old and the new accounting date must be what? Must be a difference that is 12 months or more than 12 months. So looking at this situation now, situation one, look at this date now. We have what? Year ended 30/6/2020, year ended 30/6/2021, period to 31/12/2021, year ended 31/12/2022, year ended 31/12/2023. Looking at this information now, who can tell me when can you say this company change its accounting date? Who can tell me when can we say this company change its accounting date?
2022.
Why? Why not 2021?
Because in the year 2021, they still prepared the accounting prepare the account to the normal accounting date. But in
Yes.
2022 is when it changed to
Yeah,
December.
look at it. If you look at this information now, we have what? Year ended 30/06/2021. Again, we have period 31/12/2021. Please, this period does not indicate that this is the year. This does not indicate that 2021 is the year of change. Why? Because this company has already prepared their accounts. They have a year end in that 2021. You cannot prepare an account twice in a year. So they have already prepared their accounts. So that means they cannot change their accounting date in that year again. So because they cannot change the account, so the next year will now be what? The year of change, which will be what? 2022. So the 3 statutory year will now be what? 2021, 2020, 2022, 2023, and 2024. No. Which will be what? 2022, 2023, and 2024. Another scenario you can look is that the difference between this period and this period must be what? Must be up to 12 months or more than 12 months. Must be up to or more than 12 months. If you look at the interval between 30/06/2021 and 31/12/2021, is the interval up to 12 months?
No.
Is the interval up to 12 months?
No.
No, it is not up to. So that tells you that what? They cannot have what? Change of accounting date. So that's how to determine what? Change of accounting date. Then looking at the next one, we have this one as well. Looking at this one, year ended 30/09/2020, year ended 30/09/2021, period to 31/12/2022. Who can tell me what is the year of change of this particular one now? What is the year in which this company changes their accounting date? Oh yeah, I'm listening to what is the year of change? Oh yeah, now using what we did here. 2022.
2002.
2002.
That's 2002.
2002. Yeah. So looking at it, if you look at it, we have a year ended 2000, 2001, in period to 30. So they have 30/09/2001. Year ended. In 2002, we now have a 31/12/2002. But for this 2002, we did not have any year end. So that means what? The year of change will be what? 2002. So these 2 statutory years will now be what? 2002, 2003, and 2004. So those are the. That's how to determine what? The year of change for what? For change of what? For change of accounting date. So that's how we determine what? How a company changes accounting date. So any question? Any question?
Yes, sir. Yes, sir. I have a question.
Okay.
Okay. The way they present the question, when they say year end and period to, does it mean once there is period to, it means it's either less than or more than?
Did you start the lecture with us? Did you start lecture with us?
Yes, I did. I'm aware. But if you look at the question we just solved now.
Okay.
If you look at the question we just solved now, which is question 3.
Yes.
When the last year, where we have the terminal profit, was more than 12, they still put year end.
That's for the cessation. Yeah. That question, it was that information. It was a typographical error. It's supposed to be period to.
Exactly.
It's supposed to be period to.
Because I know
it's supposed to be.
Like
when I was doing the computation, I did not put year end in my own.
Yeah.
If you notice, what I put was period to. So that information must have been a typographical error. It's supposed to be period to.
Thank you very much. That's what I want to just confirm. Thank you.
Any other question? Any other question?